In this video, I wanted to talk to you about the 4 factors that impact real estate prices, availability, and investment potential. The 4 factors are demographics, interest rates, government policies and subsidies, and the economy. Okay, so let's go through them. First, demographics. Demographics are the characteristics of a population. Its age, race, gender, income levels, the kinds of jobs held by the people that live there, and many other things. Now, demographic statistics help determine the real estate prices as well as what type of housing people prefer when they're moving into a certain area. This would be defined as whether people have lived in the city or suburbs and the price ranges that go along with it. For instance, if somebody moving into a starter home for a first-time buyer, that's one type of buyer, or if they're moving into a luxury condo for retirees that have plenty of money to burn, right? 2 different demographics, 2 different types of people. Now, major shifts in a nation's demographics can affect real estate trends for many, many years, just as we've seen recently with people leaving, say, California for Texas or New York for Florida. Second, interest rates. If someone is planning to buy a house with a mortgage, it's important to research interest rates to calculate how much the monthly payment is going to be. When interest rates fall, it becomes easier to obtain a mortgage loan, and therefore more people buy houses, buy more homes. This increased demand creates greater competition among buyers and pushes the pricing of the housing up. As interest rates fluctuate, so does a person's ability to afford more house, to spend more money on housing. So that also drives, one of the primary drivers is how much the cost of money is. Third, government policies and subsidies. So legislation and government subsidies can affect real estate pricing. Now, say tax credits, deductions, and other subsidies are some ways that the government can help temporarily increase demand for real estate. Many cities will often offer tax abatements, for instance, to spur growth and revitalize an area or part of the city where there hasn't really been a whole lot happening. Now, being aware of the current government incentives can help you respond to the market changes and identify potentially false trends. At the same time, knowing what's going on with the government can also help you in terms of, say, buy a certain asset or do some development in a certain area as well. And number 4, the economy at large. The value of real estate is often affected by the overall health of the economy. Now, this can be gauged using economic indicators like the GDP, the gross domestic product, and employment data, among other things. Now, when these 2 items are poor, so are investments in real estate. People just want to hold back and save their money. Now, I just discussed some of the primary factors that influence real estate pricing, but there are many other complex issues involved with determining the valuation of an asset. Now, learning about these factors that influence real estate pricing and applying this knowledge to evaluate investment opportunities is essential for anybody hoping to make money in real estate. So going deep and understanding how these different mechanisms work is very, very important. Okay? Follow for more, guys. Talk to you soon.